Hi, I have Cailin Birch with me, global economist. Cailin, it's lovely to have you with us, and thank you for talking to us. Could you tell us a little bit about your experiences regarding IP Week?
Yeah, it's been a fantastic week, really, to kind of see representatives from across the board: oil, gas, renewables, private, public. It's been a real, I think for me, meeting of the minds where you get to have a little bit of exchange that you wouldn't necessarily have on your average day. Very insightful.
And looking at forecasts globally, the coronavirus being a big player within that, how do you see? It's very difficult to be able to forecast something you don't know where the end point is. So how are you managing that?
That's been the major challenge. Again, we'll know this will have a major impact on China, the main contributor to new oil demand each year, new energy demand generally, but again, thinking about key prices that affect the entirety of the global economy. But you're right, that is the challenge. We don't quite know where this will end. So the EIU expects that China will have the virus's spread contained by the end of March, and that will allow for an economic recovery, and that means a recovery in oil demand as well in the second half of this year, after we see kind of a brief recovery period in Q2. Now that has been based on scientific research in China and the speed and strength of the authorities' response compared to, say, the SARS outbreak in 2002-2003 led us to think that was a realistic timeline. Now, what concerns us is the spread we've seen over the last week of the infection rate in other countries: Iran, Italy, South Korea, Japan. This will perhaps cause that timeline to slip, and if it does, we'd have to downgrade our forecast for energy growth and therefore economic growth around the world. So we'll be keeping a close eye on that. But the main concern, again, is China and its impact it'll have on the broader region. The main kind of bottom line is that 2020 is not going to be a great year for the oil market.
And how is that going to affect moving forward, to 2050, the big sort of talking point at this IP week? I mean, if this does break out to be a much larger scale, how would that affect that potential target in 2050?
Right. Well, it accelerates the transition that we're already seeing. We're talking about, in the last couple of months, all the focus has been on coronavirus and the impact it will have in 2020. But this is really just a slightly exaggerated moment in an already clear transition of slowing energy consumption, and we expect that to be very much the case for the next decade. So we talk about peak oil in the late 2020s or early 2030s, but that's not a looming deadline that's business as usual until that point. We're already in a structural slowdown in oil demand. Again, the coronavirus has accelerated that. We'll probably see a little bit of a rebound as the virus's spread is contained, but it won't change that trajectory of slowing oil demand. And the risk that I think I see in that is that oil prices probably won't rise much above the $60 to $65 per barrel range for Brent, which for a lot of Middle Eastern and other oil-reliant economies is not a high enough level to fuel the economic transition that has to happen by using oil and gas revenue to invest in new industries and diversify the economy. It's hard to see how that's going to happen with oil prices as low as they are when that deadline is looming.
Absolutely. It's quite difficult to project something that you don't know what's going to happen,
right.
But you're doing a very good job. Thank you, absolutely. Thank you ever so much, Cailin, for joining us. This has been Jason Davis of KOG TV. Thank you.